Welcome back to the channel, everyone. Manny B Investing MBI, and we are going to check out the latest Paribus blog post. This one comes right on time. The Telegram group, the Telegram traders group for PBX has been exhausting with the FUD and fear and the fighting and the worry. So when I saw this title, I was like, ooh, yeah, I like this. I like the timing. I feel like they've been holding on to this one. Let's take a look and read and see if it is what we think it is. Let's go ahead and close out some tabs there. Let's see. Don't fear the FUD. Over the past week, the crypto market has taken a hit due to the usual fear, uncertainty, and doubt surrounding the potential for interest rate hikes and future regulations. It's easy to get sucked into the panic and feel that crypto is being unfairly targeted. FUD is part and parcel of the crypto space, and there are always plenty of narratives that accompany its volatility. In 2021, the favorite topic was China's negative approach to crypto. Fast forward to today, and Bitcoin miners are back operating in China, and the government is seeking to make Hong Kong a regional hub for crypto. See how fast things change? Just calm down. Meanwhile, the narrative has now switched to the negative approach the U.S. government is taking towards crypto. The failure of Silvergate Bank is being attributed to some to a conspiracy involving the Federal Reserve because they were potential competitors to the Fed's upcoming payment system. Interesting. When we focus on just the crypto market, there's a tendency to see patterns that accord with the usual narratives. If we zoom out and look at the situation in a wider context, it's easier to see that the current turbulence is affecting all markets. For instance, many people have focused this week on the collapse of Silvergate Bank because of its close ties to the blockchain industry. While this certainly has an effect on the crypto market, it isn't the only bank in trouble. On Thursday, shares of Silicon Valley Bank, SVP, plummeted by 60% before the close of the trade and dropped another 20% after trading. The contagion from the event wiped $50 billion off the value of the four largest U.S. banks. It also hit banks in Asia and Europe, wiping an average of 5% from their value. The reason for the drop in value of SVB is that they had to liquidate some of the U.S. Treasury bonds they hold, leading to a loss of $1.8 billion. U.S. bonds are held by banks throughout the world as a form of highly liquid security. The problem of bonds arises for banks when the Federal Reserve raises rates, which makes the bonds they hold become less valuable. Due to the nature of fractional reserve banking, banks only need to hold a fraction of their balance in highly liquid assets. Normally, this isn't a problem. However, when confidence drops and people withdraw funds en masse, the bank has to liquidate some of their assets to pay the withdrawals. This week, Jerome Powell, head of the U.S. Federal Reserve, indicated that inflation was still a problem and that they would to raise interest rates faster and longer than previously thought. Not what I thought. While this had a negative impact on crypto, it also had a bigger negative impact on the banking sector. Speaking with the BBC, Ray Wang, I'm sorry, founder of Constellation Research, said, "The banks are casualties of the hike in interest rates. Nobody at Silicon Valley Bank and in a lot of places thought that these interest rate hikes would have lasted this long. And I think that's really what happened. They bet wrong. How? As soon as they started raising interest rates, I'm like, dude, they're going to be raising these interest rates for years, like through Biden's entire term, because it doesn't actually fix inflation. So they were just going to do this forever until there was a new president." That's what I thought. So I don't know. I understand how these bankers, these millionaires and billionaires didn't understand that. Maybe they know something I don't, but maybe they don't. Maybe they don't know something that I don't. Oh, it's a weird one. Okay. Anyway, while the problem at Silvergate are related to the far-reaching effects of the FTX collapse and some of their previous investment choices, the continued interest rate increase by the Fed add to their woes. The liquidity crunch that monetary tightening creates is intended to crash the economy in a short term to benefit its long-term health. Yeah, so, crash land the plane to help, the longevity of the plane. So as we've said many times before, the volatility of the present bear market will likely continue for a few months. Rather than getting pulled into guessing when the next bull run will be and the despair of false hope, it's better to zoom out and see the turbulence in a wider global context. This helps to maintain confidence that things will change whilst avoiding the frustration of relief rallies and dips. Whatever the surface narrative, the underlying truth is that bull runs need liquidity, and that only comes when the Fed starts to lower rates. Until then, it gives everyone more time to gradually accumulate tokens in preparation for the next cycle. So that's what I'm doing. I'm accumulating. I'm picking stuff up. I'm for low. I'm selling it high. I'm taking tokens that have use case. There's staking available. Hopefully liquid staking. I would love to do that, but you know how it goes. But you know, let me know what you think about this in the comment section. What are you picking up? Excuse me. Ooh, got a little dust on my microphone here. What are you guys picking up? And what are you holding on to? What are you staking? Are you picking up PBX? Are you dumping PBX? Don't be afraid. It'll go back up. Just hit that like, hit that share, subscribe, and I'll see you on the next one. Peace.